Hey everyone, welcome to this week's Weekly Forex Forecast for the week ending January 24th, 2025. Today we are talking about the DXY, the US dollar index, the euro, the pound, the dollar versus the Canadian dollar, and also the Australian dollar. So this week was pretty quiet for the Forex market for the most part, at least relatively speaking. But technically speaking, these markets have been playing out really nicely, starting with the DXY, which we've discussed this channel here for months, which this is where we were getting bullish back here on the reclaim at 102.60 off of the bottom of this channel. And what I've said since that time is that we always had the potential for the move up here toward 109 to 110, because if you'll notice, going back here to late 2022, this was an imbalance for the DXY. We saw a very aggressive sell-off back here, a very shallow retrace. So this was an imbalance up here for this market. And that's exactly where we're seeing the DXY trade here over the past few weeks. Now, one thing I've said though, despite the fact that we did see a 109.50 retest, okay, so this up here, this retest, technically all the way back here on this candle, this satisfied my target, at least one of my targets up here in this area. However, one thing I've said here over the past couple weeks is that I wasn't convinced that the top was in just yet. And the reason for that is because if you look at the top of this channel, okay, basically off of the top of these two highs right back here, you can see that we do have the top of this channel coming in closer to 110.50. So that's kind of been what I've said here over the past few weeks as a potential target for this market, to where this right here could give us a top for the DXY, at least a local top, potentially the macro top for the US dollar into 2025. But right here, you can see too that we have this trend line off of some of these lows. And this is what we've talked about, especially in the VIP group. We've been nailing this all week long, including this low back here on Wednesday and also today. So what I mentioned there in the VIP group in Discord was, you can see here, even on the hourly time frame, you can see how this level has served as support here for the DXY. Now, of course, if you look at this on the daily, you can see, and you can make the case that this is a rising wedge here off of these highs and lows, and it very well could be into the top of this channel. But at the same time, though, this is not the time to be getting bearish on the US dollar, in my opinion. This is what I've said now, for the last few weeks. And basically, while the DXY is above this area down here, right around 108.80 today, as long as it's above this, we have the potential for a move into this 110.50 area before we get a local top from the DXY. Now, one thing to note here as we move into the weekly close, which there's about, right now, about 5 hours left in the weekly close. If you'll notice here on the weekly, last week technically closed above 109.50. So if we get really granular here, you can see where this weekly high was right off of 109.50. That was our key level. That was that imbalance from late 2022. And what you'll notice is last week closed above this. So I've been talking about this all week in the VIP group as well, that everything that we've seen so far this week really could just be a push down here into last week's range before we get the weekly close back above 109.50. And so far, we have seen a nice surge here from the US dollar over the past few hours, following a pretty aggressive pullback this morning. So you can see the market, as soon as the stock market opened, we got to push down here into this support area. And so far, though, since that time, we have seen a nice little bounce here. So the market isn't too far now from that 109.50 level. So this is going to be interesting into the weekly close. If we get the DXY closing back above this level up here to hold above this on a weekly closing basis, if that's the case, then I think 110.50, this area up here, potentially 110.60 or even 110.70 could be in the cards here over the next week or two. Now, of course, there is no guarantee of that. We could see the market break down before retesting this area up here. So it's like I mentioned this past week in some of the videos, really I think this comes down to two scenarios. Either we get the market closing back above 109.50 and showing strength above here into next week to get that push up here, before we get a pullback, or if this breaks down and we come down here, sweep some of these lows, and then potentially we range here for a bit. All right, so I think that those are the two scenarios that at least I'm eyeing for the DXY. But the bottom line is, like I've been telling VIP members, I am staying bullish on this market as long as it stays above that September trend line. So next up, we have the EURUSD, which, by the way, guys, before I go on, if you do want to join us in the VIP group, including access to the course and also the real-time Discord group, see the link in the description of this video for 85% off lifetime access. Or if you're on the website, click on that Join VIP link. So with regard to the EURUSD, things have been pretty straightforward, although like I said this past week, I do kind of think that we are past the point of those quote-unquote easy trades. And the easy trades that I'm referring to if you guys will remember, if you've been watching these videos for a while, there was a trend line off of some of these lows back here that we did catch. So following this breakdown right back here, this, in my opinion, was a very straightforward trade because you had the breakdown, you had the DXY breaking out to the upside. You also had this imbalance back here, right, from this candle. So this became our target down here in this area. If you'll remember, 103.50 was my end of year target for 2024. And in December, I talked about the potential for lower from the euro to fill in this imbalance back here. So we're starting to get that now. We're seeing the euro start to fill in some of these imbalances from back in 2022. So things become a little bit more complex for these markets. It's not as straightforward as it was back here. Now, with that said, though, and here's the thing. I know a lot of people have been looking for euro bottoms following this price action, thinking, okay, the market has to bottom at some point here. But the one thing that I've discussed is if you look back here to this weekly breakout candle, what you'll notice is that we had or have two imbalances back here. And in fact, you could really make the case that there are three. However, in terms of, imbalances or fair value gaps on the weekly, you really got this level back here. So right around 1.02, this is the current support level that the euro bounced from this past week. And then you've got this level around 1.009. This one right here has yet to be filled in. So this one is still open. This one has been satisfied. So you still have the potential for the push lower into levels like 1.009 before we get a potential bottom from the euro. And that could materialize if we do get the DXY pushing into 110.50. Okay, so something to keep in mind. And then of course, we also have parity down here off of this high from right back here. So parity is something that we have to entertain just because it can serve as a magnet for a market the closer it gets to it. So all levels to keep in mind, and all of these go back to this price action here in 2022 that are especially clear on the weekly time frame. So moving toward the daily, so far this week, we have just seen a range develop here, which if you were looking for short-term opportunities, you can see that we did get a bounce from this support area down here that we've discussed. We also got a rejection right there from 103.50. So if you're a range trader or you're an intraday trader even, you could be looking for opportunities from these areas this week. But I do think from here, guys, if you look at the price action so far this week and you consider the wicks that we got here, this wick down here is completely open. We never saw the EURUSD come down here into this area. So considering the fact that we have a downtrend, we saw the market test 103.50, we're getting the DXY bouncing from the September trend line, all of those factors, in my opinion, point to a move down here toward this wick. So a retest down here at 1.02. Now, whether or not that's tradable for you is completely dependent on your trading style and your rules. But I think short term, that's where we go. Now, from there, what's going to be critical is to see the EURUSD get below this area. If we see a sustained break below here on the high time frames, then that opens up that 1.09 imbalance, or 1.009. And then below that, of course, we have parity. Like I said, with the market, coming this close to parity, especially if it tests 1.009, we have to at least factor in the potential for a retest of parity, that 1.0 number, just because, again, it does become a magnet for markets the closer they get to it. So we'll see what we get here over the coming days and weeks. Right now, though, the downtrend is intact, guys. There's no sign of a bottom. I keep saying that. But really, until we get, in my opinion, until we get the DXY into 110.50, the euro down here in this area, and then get some type of bottoming price action, especially with the market closing some weekly candles above some key levels, there really is no buying to do here. In my opinion, instead, I'm looking to short into resistance or breakdowns below levels like 1.02. Next up is the pound GBPUSD. So back here, we talked about this trend line on the weekly time frame coming off of these lows from 2022. So you have this candle back here, very similar to the imbalance on the EURUSD. And there is technically an imbalance down here right around 1.1645. So it's unclear if we see the pound get that low. It does seem a little bit unlikely, though, given where the DXY is trading, relative to 110.50. But we'll have to wait and see. There is still a chance we get down here. However, for the coming weeks, I think that really what it's going to come down to is this level right here around 1.22. Okay, so you can see so far this week what happened here. Very sideways market, like a lot of these so far this week. But one level too, and I want to point this out in the VIP group, what we talked about here on Tuesday, before we even got this retest, I told members to keep an eye on this low back here. We saw the market getting pretty extended down here in this area. And what I said is if we got a retest here, we probably see a pretty significant rejection. And you can see we did get that retest right there at 1.23. But, all in all, though, for the most part, the pound has been very sideways this week. So pretty unfavorable price action. However, at the same time, you can see that if you look at something like the 4-hour time frame, you can see where this is starting to kind of roll over here, where you had these lows down here that broke down, and so far it is starting to, break below that 1.22 level. So what I would say is if the pound gets below this area and holds below this on the daily and weekly time frame, then this is going to flip to resistance for next week. Okay, so close below here, this flips to resistance, and then you've got support down here around 1.2070, 1.2080 or so. Essentially this low back here, right? This region down here. Okay, so, for the most part, very range bound so far this week, but the downtrend is still intact. And just like with the euro, I see no reason to be looking for buying opportunities here. If anything, just like this back here that I know some VIP members caught, this is the time to just be looking for shorts into resistance. Okay, of course, that's going to come to an end. Like I said before, I do think the time for quote unquote easy trades is at least coming to an end. I'm not going to say it's over, but I do think things are going to be a little bit trickier if we get the DXY testing that 110 to 110.50 area. Okay, so now for the currency pair that I have focused on mostly here over the past few weeks, and that is the dollar CAD. So I made 2 videos on this past week. The first one was talking about how this confluence of support down here for this market comes in here on Thursday. So I specifically said, watch this area around 1.4335 to 1.435 to 1.435, and especially on Thursday's session. And sure enough, we did get a nice bullish reaction from Thursday. So just to kind of, tell you guys how I've played this one. And again, I do share all of this in the VIP group in real time. So everybody gets my entries, my stop loss, and my take profit. Essentially what I did here back in this area, I was telling members to watch for a sweep of these lows because we had this range developing. And a lot of times when you see this, if we are going to get a break to the upside, before we get that, we do get a sweep of the lows. And that's exactly what we got. So on this reclaim through here, I was longing it and I took profit twice into this area. Now, I kept some of this position back here on, which I added to this week, again, announced in real time in the VIP group, on this pullback right here, right around 1.4311. So that was my addition to the entry back here. So I have a nice long entry from down here in this area. Now, for those of you who are trading this, you probably saw the pullback earlier today. It was pretty aggressive. The market went all the way here from today's high up here, all the way back down here to this low. Okay, it was a very aggressive pullback. Now, if you were a short-term trader, that could have been, time to take profit up here. But what I told members was that I was not going to book a partial profit up here this time like I did back here. Okay, because remember, I was taking profit twice back here. I wasn't going to do it this time simply because I felt that this market was at a point where it was kind of a make or break moment for it to come up here and test 1.467. Now, I'll talk about why I think the market's headed up here in a second. But essentially, I've taken profit twice on this idea. I've made some money on it, some good money. And so for now, I'm perfectly fine sitting in this position, my long position from down here, waiting to see if we get the breakout from these highs to target this area up here over the coming weeks. Now, let's talk about why the dollar CAD could be headed toward 1.467. And for those of you who watch these videos for a while, you'll be very familiar with this. This is the range going all the way back to 2015 and 2016. So you can see this has been one giant range for this market. And considering the significance of these two highs back here, it would be very bizarre for the dollar CAD to come this close to it and then just reverse from here, right? I mean, it could happen, but in my experience, a range is a range until proven otherwise. And when you get, highs again that are this significant going back a decade, they tend to serve as a magnet for a market. So that's what I've been looking for here for the past few weeks. It has taken the market some time. Because like I mentioned in the videos this week, if you guys saw those, the reason we've seen this sideways action from the dollar CAD has to do with what's been going on with oil. Because the Canadian dollar is positively correlated with the prices of oil, and oil has been surging. So that has kept the Canadian dollar supported, in which case we're getting the dollar CAD going sideways because the US dollar is strong, the Canadian dollar has been strong because of oil prices. However, what I said in the video this week, guys, if you watch that, WTI was starting to break down. We got some bearish confirmation on Thursday, and we're seeing a bit of follow through here on Friday. So with oil finally breaking down and this market coming into the apex, right, of this structure right here, it's time to make a decision, okay? And I do think that we are likely to see the dollar CAD up here toward 1.467 over the next couple of weeks. Now, I could be wrong. I could be completely wrong here, and that's okay. I've taken profit on this idea a couple of times already. My current position is well in profit, so I'm perfectly fine if I'm wrong here. That's okay. However, in order for me to be wrong, in order for this idea to fail, this market would have to get not only below this trend line here, but also below these range lows and even 1.4265. So really, as long as the market's trading above this area down here, I am bullish the dollar CAD, but it does have to get above these highs. We have to see that high time frame close above this to expose 1.467. So last up, I want to talk about the Australian dollar here, starting with the monthly time frame. It might seem a little crazy to start analysis on the monthly. However, I love to start on the high time frames, the weekly time frame and even the monthly, to get an idea of where this market could be going, especially considering the downtrend that we've seen here really over the past decade plus. So for that, if we look back here to 2008, this was obviously the financial crisis, and you can see the low comes in right here at 0.6, okay? Now, you can see this low as well back here. This was the COVID crash back here in this area, and we did get a sweep of that 2008 low. But what you'll notice is it never closed below that, okay? So clearly support down here. So we know that 0.60 is going to be a significant area here for the Australian dollar. Now, if we come into the daily, you can see where this market has been trending lower since September with the US dollar moving higher. So this market has lost over 11% of buying power versus the USD since that time. It's been a very aggressive downtrend here. And you can see where once again the market is coming into resistance. Okay, now I'm not going to say that this is tradable necessarily because it depends on how you trade. But if we get the DXY into 110.50, okay, still a big if, but if we get that, then this could put the Australian dollar down here toward that 2008 low. All right, now from there, okay, it's going to be critical to see this market break out of this structure. So the reason I wanted to present this to you is because whenever you get a channel like this that is this well defined, right, regardless of whether we get the move down here toward that 2008 low, okay, or we get the breakout from here. So regardless of whether we break out from here or we get the move down here first, regardless of that, this channel right here could provide an opportunity over the coming weeks. And again, it just comes back to the way that you trade. But looking at this here, it's so well defined that I had to present it to you guys today, just because I do think that, obviously if we get the move down here toward that 0.6 level, that 2008 low, that could be the bottom here for the Australian dollar. And alternatively, really all you need to do with a structure like this is, regardless of what we get here, if you're looking for a buy, really it just comes down to breaking the structure. We need to see a break above resistance up here, whether it be here or after we get the retest down here. But regardless, you do need to see this downtrend break in order for the Australian dollar to become a buy. Until that time, the downtrend is intact. And so in my opinion, retest that resistance are, potential shorting opportunities. Again, though, it depends on how you trade. This is never financial advice. So with that, pretty slow week so far this week. However, next week could be a little bit different with Trump finally coming into office, the inauguration set for next week. But specifically, guys, if you are trading the Forex market, I think the DXY is one you have to watch always. However, especially, over the next couple of weeks with the market bouncing from the September trend line and also potentially eyeing that 110.50 area over the coming weeks.